Welcome to LeonCo and welcome to your weekly video. Welcome to LeonCo and welcome to your weekly video. And for this week's video, we want to discuss a continuation more so of something that we talked about on last week about GameStop. We want to give a big shout out to Jonathan who asked us to keep talking about this. So let's go a little more in depth on what exactly is happening or exactly happened with the GameStop situation. Well, a group of Reddit users found out that some hedge funds were starting to short a specific type of companies in the market, and they were betting highly on shorting them so they can make lots and lots of money, not to say make a huge amount of wealth. So when these users found out about this, they decided to coincide everyone together so that they can counter short what they were doing. And how did they do this? They actually just started to buy and started to invest highly on these type of stocks. They were few mentioned, GameStop being the proficient of all of them, but AMC was still one of those lists. BlackBerry, Nokia, Bed Bath & Beyond, Best Buy were some of the companies that were in the mix that these hedge funds were starting to short. GameStop being the most hyped or being the most highlighted with all of this, started to create lots of steam and reach highs in its stock value. But what does this mean? Well, how does shorting work? Let's say like this. Well, hedge funds buy a short, which means that they borrow a stock for a certain price. Let's say $10. They borrowed a stock for $10 and then they short it, which it means that they need to give it back in a certain amount of time. Well, this means that if the stock goes down, they can sell that stock for, let's say, $7, $8. They have a $2 profit, and then they return the stock to the person that they shorted to, so they have a $2 gain. This is how it works. You borrow with 10, sell at 7, gain $3, and return the stock for 7. That's sort of a simple way to see it. Well, this happened with millions of dollars, maybe even more than millions of dollars. They shorted GameStop. They wanted it to fall down in price, and instead of falling down, it started to go up, which meant that instead of them having to sell to gain a capital gain, they had to return the stock with a bigger price tag. So instead of returning just the exact $10, maybe they had to return $100, $200 in just one stock. So this 10-folded, 100-folded the amount of money they needed to return from their initial investment from shorting, and that is what they call the short squeeze. So how did the brokerage accounts react to this? Well, when the boom hit, lots of shortage accounts panicked because they started to see a massive activity of volume for buying these stocks for the demand, and they started to limit their capability of people to acquire or to free trade with these stocks. So this created a big polemic from different brokerage accounts, but mainly the one that highlighted all of this was Robinhood. But other companies, just as Ameritrade, Webull, and some other brokerage account had this similar situation where they had to limit the transactions for these couple of stocks so that people could not get their hands upon it. Well, in the upcoming following days surrounding this situation, Robinhood has sent a couple of public notices about what had happened. They needed to protect their investors because of the volatility in the market, and they needed to protect investors from this volatile market and these volatile stocks. But what exactly does this mean? Well, for some people believe that this is just one strategy from the hedge funds, from people of high ranking in Wall Street, that this is a way so that they can manipulate the market so they can keep their capital gains, keep that money flowing to them. But for others, they believe this is just another scheme that people are trying to rise up a stock so that they can get more money out of it and continue that circle. But the reality is that no one really knows. This is a situation in which the common people are trying to send out a message and the wealthy are trying to push back. Well, this is starting to become a back and forth match in which on this week, if you notice, they still limit the purchase of some stocks, not necessarily as roughly as last week, but there is still some limit to them. And some believe that there is a price manipulation in the market so that people could get scared and sell their stocks instead of holding them or even buying more. So this is a way so that the hedge funds can have their money back and not have huge losses. The reality is that only time will tell what would happen with all of this GameStop situation. So I hope you guys enjoyed this video on a brief, more information or summary about this situation with GameStop. So I hope you guys are staying safe, staying healthy, and always remember to have that king mentality.